George Salamis, President and CEO of Integra Resources. Integra Resources is listed both on the Toronto Stock Exchange and on the New York Stock Exchange. Symbol ITR on the TSXV, ITRG on the New York Stock Exchange. Integra Resources is a gold producer with two very large development projects. The sum total of resources is 10 million ounces, all focused on the western part of the U.S., or specifically the Great Basin. And so we have production from Florida Canyon, in addition to two development level projects, the cumulative effect of which would be leading us to circa 300,000 ounces per annum of production in the near future.
George, good to see you. Okay, pretty heady times for gold producers, which are now safely in that category. Look, you just put out the Q1 25 numbers. It might be worth kind of getting into a little bit of detail about kind of where you are now and what this allows you to kind of, the next step change from here. So give us those headline numbers again, sorry, with regards to the production?
Yeah, so it was our first full quarter of production from Florida Canyon. And so we announced 19,000 and call it 300 ounces, right, in total for the quarter. And it was a very strong quarter from a production perspective relative to other quarters. The reason being there are a few enhancements and tweaks that we've made to the way they're processing gold, better circulation flow through the heap leaches, largely due to the people on site and having added some bits and pieces to that circuit of late. In addition, there was an extra 2,000 ounces that came out through the electrowinning circuit. So it was an above average quarter for us. And in terms of the cash flow that it generates, obviously more cash than we expected when we first bought this asset, when we were looking at this asset this time last year. And so that gives us more flexibility to deploy other cash at other growth initiatives, both at Florida Canyon and at DeLamar and Wildcat. All of these assets, by the way, are all kind of clustered around, the same part of northern Nevada, southwestern Idaho, all within 3 hours drive. So lots of synergies to drive there. We're really excited by what's going on right now.
Well, yeah, I mean, and the cash, $61 million in cash, and we'll come on to that in a second in terms of how you allocate that between the projects. But just coming back to what you say, is above average. Above average sustainable, or above average don't expect it to be so good next quarter?
We're going to try and sustain it, but it was above average. Again, largely due to squeezing some more gold than expected out of the circuit. Maybe that was a one-timer. We'll see.
Right. Okay. And so moving forward, you've talked in the past about this, moving towards a kind of 300,000 ounce producer once all three projects are up and running. How do you get there from here?
Yeah. So we've got Florida Canyon has a reserve life of 6 years, and we're strongly convicted along the lines of what you see is what you get from a production perspective right now. There might be scope to optimize and enhance that, maybe bump up production in the future, subject to some optimization studies that are happening on site. There's a lot that we can do with that asset, especially at $3,000 plus gold. So we're looking at those. Maybe some more cash to be pushed out of that asset in the near future, subject to, again, these optimization studies. Taking the cash from that and in a non-dilutive manner, de-risking the other two assets, DeLamar and Wildcat, is really the goal of the mission here. We've been on this dilution treadmill, as our shareholders know very well, over the last 7 or 8 years, of having to finance once a year the same quantum of funds to de-risk our development projects. Now that is gone. We put that to one side with the cash flow, where we have the ability now to not only sustain but actually look at growth initiatives on all three assets, which is great for us. And so it's the simple concept here, Matt, is one asset pays for the second, which pays for the third, the cumulative effect of which is 300,000 ounces of gold.
Okay. And can we just talk about some of these optimization features that you're looking at and the sort of transferability between projects in terms of if it's a skill set that you're good at and then you can take them to the next thing? I'm interested. So you mentioned electrowinning for instance. I mean, maybe explain that to people first of all.
Yeah. So once the gold laden solution is put into solution, essentially, you have to pull that gold out, and I'm explaining it simplistically, but it essentially, you're through electrochemical processes, you're drawing that gold out of solution, then you're using that solution and you're putting it back into the heap leach. So it's a closed circuit, if you will. with respect to that. There were some improvements that were made to that circuit recently, again, resulting from the better than average cash flows that mine has experienced over the last 2 years. A lot of money prior to our sort of arrival on the scene, the acquisition, was put back into things like the electrowinning circuit, the carbon or the CIC circuit as well. And these are all just sort of small improvements. They didn't cost a lot of money, but tweaks here, tweaks there, they add up, right? A couple of the other things that we're looking at right now is the fleet. What can we do to right size the fleet? Maybe we can look at bigger scale mining in the future with larger haulage capacity. Maybe look at more run of mine processing as opposed to crushed ore heap leaching. Things like that. All of these things really add up.
Right. Okay. You obviously you mentioned the CIC circuit, and I guess the increased heat-based solution flow rates have helped. Maybe it's coming back to the sustainability and asking the sustainability question in a different way. Is how do you expect the kind of cash costs and your AISC to trend over the next few quarters, or is there kind of new cost baseline forming here post optimization? I mean, how are you looking at that?
Yeah, a couple of factors. One, we're waiting to see what some of these optimization studies, will show in terms of cost improvements at the mine site. We're also waiting for our COO to kind of fully get into gear at Florida Canyon, at Integra. So Cliff Lafleur, as I think we talked about in our last meeting, Matthew, he's been added. Cliff comes from Silvercrest. Great track record of not only developing projects but operating them successfully. And so Cliff literally just joined, a couple of days ago, and he's getting his feet wet. But we fully expect Cliff to kind of jump on board with that. Here's what I think Florida Canyon can do from production and from an AISC perspective. We have yet to put out that guidance. We'll probably put it out sometime in late May, maybe early June. Again, Cliff needs to get comfortable with what he's seeing out there, and again, waiting for some of these optimization studies to kick in, which I'm sure will have a positive effect.
So Cliff, he was at Silvercrest and Kerr, wasn't it? Or sold eventually La Chispas to
Las
Kerr,
Chispas. Yeah,
right?
That's right. That's correct. Yeah.
Okay, interesting. And what's remember? Because I was intrigued by the talk we had last time around the sort of management team and this. You got a builders team right here. That's what you're putting together. What exactly do these people bring to the table? What exactly are they going to do for you in terms of delivering the strategy?
Yeah, it's very much as you said. It's a builder's team. It's an owner's team, right? It's not a strategy that's kind of focused solely on waving a flag and saying, please take us over. That's the only way out for the investor. We're firmly focused on building a company here, a mid-tier coal producer. Florida Canyon was step one in that. So this team, led by Cliff, from a technical perspective, will do that. Cliff has that capability of not only managing a mining operation, because he's done that before, but also building projects. He did it at Las Chispas. And so he's got that dual ability, and that's what we have within Integra. We've got one producing asset and two development level projects. He's really capable at doing both of those tasks at the same time. In addition to that, we added Dale Kerner. I think we talked about him. Dale comes to us from Perpetua. Perpetua just received their record of decision. And so Dale's task is to do the same thing for Integra at DeLamar. And so, you put all of these, the sum of all these parts together, a much different company than what we had 6 months ago.
But he's the VP of permitting, right?
Correct.
You say that is obviously something that you see as potentially a long pole in the tent and possibly a roadblock if you don't do it right. So again, what for him, the challenge is to do what? Deliver it within a certain time frame, or set you up differently so that you can get through that permitting process more easily? Yeah,
I think it's more the latter, Matt. It's the process, from what I can see, permitting big mining projects in the U.S. and counts for everywhere else, is to try and stay on track and not get derailed, right? As you permit. So So to keep the permitting regulators, in our case, both state and federal, focused on what we've just submitted, which is the mine plan of operations. What does that look like from a development, operation, and remediation perspective? Not to get sidetracked by too many details, which will take you on tangents, which cause time delays, etc. Keeping everybody focused. That's exactly what Dale has just done with Perpetua. And our expectation is he'll be able to do the same thing with us at DeLamar.
Right, and so and just sticking with the team, that's you and those guys we've just mentioned and others. The kind of systematic de-risking development path. That's where I kind of see most of the gains, most of the upside for companies like yourself, with multi assets that you've got to kind of take along that development path and into production as well. So what are you looking beyond sort of financial de-risking? What else is there?
Financial de-risking, permitting de-risking, obviously in the context of DeLamar, and I should also add Wildcat as well, which is 30 miles to the west of Florida Canyon. We're now viewing Wildcat as an extension of Florida Canyon. It's that close. We can deploy the workforce once Florida Canyon is done over to Wildcat. So de-risking of Wildcat also becomes very important in that topic. De-risking for Wildcat, what that means is advancing permitting, advancing the project to PFS and then FS, just getting it into the permitting queue, getting it ready for when Florida Canyon maybe comes to its end, we can make a smooth transition to Wildcat. Initiatives like that, I think, will add a lot of value because they're really not getting a lot of value now in the grand equation of how we're valued now, which is largely speaking Florida Canyon, right? For production, that's our PNAV is relatively just Florida Canyon, and in essence you're getting DeLamar and Wildcat for free. And so it's time to look at deploying some of that cash from Florida Canyon to de-risk the other two development projects, get them moved along.
Right. Okay. Given the simplicity of what you're doing, these are all heap leach projects, relatively simple earth moving exercises. What are the kind of long poles in the tent for you? And do you looking at this through the lens of what it's been like in the past, or should we pay attention to what the Trump government is saying with regards to simplifying it for natural resource companies? Is there any upside to that?
Well, theoretically, I mean, this administration that's in place in DC is the best administration that's come along in decades when it comes to mine permitting. At least that's the motions that they're making sort of outwardly. There have been executive orders. And for example, I mean, last week there was an executive order that was issued, which specifically named 10 mining projects that were going to receive priority attention to move along through permitting because they were judged as being of strategic importance to the U.S. And they also mentioned ... and there will be more to come. And so we believe that there's a real initiative, a real push out of DC to get the U.S. back into the mining game. We're counting on that. We're counting on that happening at the state level as well, and we're seeing it actually tangibly at the state level with the incorporation of something called the SPEED Act, which is basically the state saying we want to go as fast as the feds want to go, and so we're going to assign priority to these projects, and they haven't named them yet. In Idaho because we view them as strategic importance. Again, a good time to be permitting a project in the U.S. for sure.
Right, and working in the U.S. for full stop. Talk to me about the money. Okay, okay. How much more money have you got in the bank now than you did last quarter?
We added about $10 million to the balance sheet.
Right.
Between
and you're spending money. You weren't.
We are.
In case of hunkering down.
We're not just sitting on our piles of gold. We're cashing that gold in. We sold gold at record levels. I think our last gold sale was 3,400 and change. Right. Unthinkable to us 6 months ago when we got into this transaction. So that's great news. But we're redeploying capital back into Florida Canyon. We're redeploying capital into things like exploration, for example, which we'll be talking about pretty soon here. We're soon to kick off something that looks like a 10,000 meter drill program aimed specifically at adding mine life to Florida Canyon. So taking the 6 years that's there in front of us and seeing if we can't add an extra 2 or 3 years to that. for the first time in a very long period of time that so much exploration is going to be focused specifically at the mine site. We're really excited by that. So, and we'll be talking about that the next few weeks here.
So you're running all operations and all expansion activity off of cash flow.
Correct. Yes.
No more fundraising.
No more fundraising. You have no idea the stress that it takes off of management, Matt, to not have to think about where's the next dollar coming from. It frees up so much bandwidth from a management perspective to be in that position. And we feel very grateful and fortunate to be in that position.
Okay, so for us investors, no dilution.
Correct.
It's also quite a nice thing to feel when you're invested into someone and then a project like this. Okay, so let's come back to the cash thing in terms of let's look at the exploration component, because that's a real enabler for obviously Florida Canyon in terms of the life extension, life of mine, etc. What do you say that could look like? You're talking about, it doesn't sound like a lot of meters, but
it's 10,000 meters to start off on the exploration point, and I think the question you're asking me indirectly or directly is what's the capital allocation look like in terms of what are we going to do with the cash that we have? And so it's funny, we had a meeting last week of all of the VPs and executives and the board to talk about it, specifically that capital allocation. What's the best breakdown of how much do we put as a percentage of the cash that we have into exploration versus, say, fleet equipment, haulage equipment updates on Florida Canyon versus, permitting initiatives at DeLamar and Wildcat, or maybe some de-risking initiatives at both of those projects. And I think that capital allocation has become something that's very important to shareholders, always has been. So, it's a buzzword that you hear in the tech sector, right? Capital allocation is king. I think it also applies to the mining sector. And again, just to restate how fortunate we feel to be in this position finally, not knowing, of course, that the gold price was going to do what it was going to do when we bought Florida Canyon. We bought Florida Canyon because we thought it would cover the G&A expenses and a bit of permitting work at DeLamar and Wildcat, and that's it. Now we've got more to deal with, so that capital allocation discussion becomes very important. And again, we'll be guiding on that in a couple of months here. But it's a really exciting discussion to have, finally, right?
Yeah, for sure. I mean, it must kind of change the types of conversation you're having. You don't have to worry about go plod the streets and try and raise capital. I get that bit. But does it also, on the upside, it's like a pleasant conversation, does it allow you to maybe sort of rethink about how you come after these projects, or even look to phase them, the timing there, and almost delaying some of the spend to kind of maybe eke out all of the margin on that you can on Florida Canyon, or does it not change much for you?
Yeah, again, that's part of the discussion, Matt, which is, how much cash do we keep in reserve for a rainy day? How much cash do we keep in reserve to pay for the equity portion of what DeLamar will cost to build ultimately? Because there'll obviously be some form of project financing there, and that will start probably process-wise, probably a year and a half, 2 years from now. So again, this is all part of the mix. How much do we have the luxury of reserving for things like that? Again, great discussions to have. Never thought we'd be having them.
No, indeed. But are you sort of tempted? I mean, so have you kind of got one eye on other projects? You've got a portfolio, and you kind of worked out the sequence in which you play this. But it's great if you're a producer. It's probably great if you're a near-term producer, advanced development type story. But for everyone else, it's still a real struggle. Capital is hard to come by when people do raise money. It's super, super expensive at the moment. Equities are cheap, that's for sure. Are you seeing other things? Are you even looking at other things, or what are your plans on that front?
Yeah, it's funny. I was telling this to somebody else the other day, which was, it was barely 3 months that we own the asset, and we're into month 4. We had 3 months to kind of bask in the glow of being brand new producers in the gold space, right? Which was great for 3 months, and then I started hearing the comments recently, oh, you're a one asset producer. There's a lot at risk to that. You need to go out and acquire something else. there's some truth to that. We've seen one asset mining companies, one producer mining companies, go sideways or fail, and sometimes fail catastrophically. So will we be looking at more M&A in the future? Yes, we will be. Is it nice to have the stock, having a bit of a lift here, gains made, taking a bit of a breather on M&A, just having done something? Yes, it's also good, but no doubt we'll be back at it soon.
Okay. And how are you treating this gold? Because again, it's all new, right? It's relatively nascent. Like, I know you've been there before, but in this setup with this team, it's all kind of new in the sense that gold's never been as high as it is. You guys, producers, are making out really, really well, in terms of margins, etc. You've got this money to work out where you allocate. You've described, some of what you're going to do, but do you still sort of look back and say, well, hedging's not a bad idea? Things do go wrong, and we've just got to be a little bit smart with this. It may not always be as sunny as it is today.
Well, so we did put in a hedge program, but that was hedging with puts, essentially covering us on the downside, basically on the in the scenario, the what if, let's just say what if gold was to go back to $2,000 an ounce, just pick a number. So we hedged a bit more than 75% of what we expect our production to be in 2025. We hedged that at $2,400 and change. That didn't cost a lot of money. That's an insurance policy. I think that was well received by our investors. We didn't forward sell any gold purposefully. I don't know that makes a lot of sense to be doing right now. Will we be doing more puts to protect the downside going forward? If the price is right, I'm sure we would. Why wouldn't we?
Okay. You talked earlier about a good time to be a kind of U.S. producer into this kind of market, this type of geopolitical environment that we find ourselves in. There's not a lot of competition in the U.S., it seems. I mean, in terms of not a lot of new U.S. production. Where does that put you? Where does that, how do you view yourself in that kind of environment? Do you expect there will be more competition because gold is where it is? Maybe there will be more money available for some of these big projects, or is it a case of it'll be like mergers of equals and no new pounds actually getting in the market, just name changes of companies? How do you view this market?
Yeah, so if I was to categorize the Western U.S., it's very much a case, or the Great Basin, it's very much a case of the big guys, the Barricks, the Newmonts with their mega producers. There are a handful of sort of, the Marigolds, SSRs. They produce a lot of gold, 300,000 ounces, I believe, is their kind of annual production rate. But not many of those. And then there are some smaller producers like the 50 to 70 to 50 to 80,000 ounce a year producers. There's really not a lot of those. Where the opportunities we believe lie would be to relook at some of these assets in this current environment that we have that might make sense to bolt on, that might potentially shake loose from other M&A transactions. Right now, what we're seeing in the landscape of what's available to buy now, straight off the shelf, largely speaking, is, I'm not going to say fully broken, but needs help. A lot of technical risk involved in getting by these, capital injection to put back into them, to fix them. There are a few of those out there. Really not that you could buy something that's kind of plug and play off the shelf. It's going to work straight away. Maybe there'll be some of that type of assets shaking loose from other M&A transactions. Who knows? We'll see. Okay.
But the institutional support for you out of the U.S., what's that look like?
Yeah. So right now, I think we passed the 50% U.S. shareholding mark, which is an important milestone for us in the U.S. The story is resonating really well, and you can see it in the trading patterns as well. I mean, if you look back at the stock 2 years ago, majority of our trading was TSX, and maybe a third or less was NYSE. That's completely reversed now. Trading is almost equal, if not more dominant in the U.S. now, which is music to our ears because that's kind of our home market. right now.
But if I look at the share register now compared to, say, 5 years ago, it feels like a lot of shareholders are kind of rotated out. It was a different company back then, and maybe in the last couple of years, maybe you've evolved into something new. I mean, do you where do you judge yourself against? Are we starting from the here and the now? Would you look back and go, crikey, we've got a lot of catching up to do? Is there overhang from back in those days or not?
We've had some very loyal shareholders institutionally that have stuck by us, the usual suspects, and we're very grateful to have them there. They've been on the registry now for 6 years, better part of 6 years. And, we all know who they are. We've added a few new ones to the registry as a result of this transaction, which has been great. We're also starting to notice that we're getting more attention from those funds, specifically in the U.S., who are focused on producing cash flowing mining investments as opposed to speculative, development only stories. The pension funds out of the U.S., for example, we're starting to have more dialogue with those types. I would expect a bit of our share registry to start rotating into them. Again, just bear in mind, we've been in the production game now for a short 4 months. It's going to take some time. I think what's going to happen there is, once we show quarter over quarter that Florida Canyon's producing, it's making great cash flow, our treasury is increasing over time, our ability to point to that and say, hey, we are now a bona fide producer. Look what we're doing, I think is going to bring more of that type of investor to us.
Okay. And if I was to say to you, right, okay, help me or help some of those new companies understand what this value proposition looks like. What are the numbers I'm looking at? What's the kind of growth profile that you would encourage me to look at?
Well, the big leap from a production perspective really happens when we go from just Florida Canyon to Florida Canyon plus DeLamar. And so Florida Canyon, again, if you were to judge Florida Canyon on what it produced in the last 2 years, which were record years, 75,000 ounces a year, you could probably make that assumption for the next 6 years. That would be reasonable to make. Maybe, hopefully we can do better. But really the big leap occurs when we go from Florida Canyon plus DeLamar on a total production basis. Now you're talking 200,000 ounces of production. That starts to become very meaningful and very serious to the bigger institutional investors. And then Wildcat, of course, adds another 80, 200,000 ounces onto that. That's the dream big scenario, sort of 4 years out. That's the value proposition right there.
Okay. And where does that put you? You sort of described maybe a little bit of the landscape in terms of the types of producers, size of the producers in the US, but just as on a pure kind of fundamentals basis for investors, you're saying your chances of success are good. You kind of got this kind of portfolio approach, but it's project one funding project two, funding project three. Is there some point where we kind of see this kind of Venn diagram and get a sense of what the total size of this thing and potential of this thing is?
I believe, Matt, that re-rate occurs in steps. So if you dial back the clock to, say, a year ago when we were purely just a development story, PNAV, for example, was 0.15. We acquired Florida Canyon. Of course, we were not expecting to get an instant re-rate straight out of the gate, but our PNAV then went to 0.25. There's been a lift. We've corrected upwards, which was great. We're now at 0.35. In the entire universe of our peers who have also re-rated upwards, and our peers being the junior producers, the average PNAVs are 0.6. So we still have a bit of a double sitting in front of us just to get recognition for what we have today. Not counting at all the NAV exposure that they get from DeLamar or Wildcat. That's a strong value proposition right there.
Okay. And if I'm just rather kind of crudely looking at the gold market at the moment, it's been on a tear. Beginning of last year, January last year, $2,000. It's hit 3,400. It's knocked off a little bit in the past few days, but it's been super for producers. Can gold hold at these levels? Do they need to hold at these levels? And when you're looking at these sorts of gold numbers, you're obviously looking at money you're making, but is there a number where you think I prefer if it didn't get below that again? I can't see any reason why it should.
Yeah, I would prefer if gold didn't get below $2,000 an ounce.
Right.
That would be that wouldn't be good for too many of the producers out there who I think are printing a lot of cash these days. It's going to be very interesting to see the numbers that will come out of Newmont this evening. Right, they're kind of a bellwether for the industry at large, and it'll be interesting to see what their balance sheet looks like, how much cash they've actually been generating from their assets. Because really what happens to Newmont, because they're the big dog of, institutional appetite, really has a trickle-down effect to what happens to us ultimately. Hopefully, not touch wood, gold price hangs in there. Where's gold heading now? I think that, the rise in the gold price is clearly telling us that there's a lot of risk in the world. I don't think that risk has gone away from one day to the next because gold has lost $100 in the last trading session. I don't believe it. That risk is still there. And I'm a big believer in the gold price going forward. I have to be, obviously.
Yeah, we all are. We all are at the moment. Okay, well, George, Nick, nice summary on the Q1 numbers. Appreciate you giving us the time to kind of talk through that. I guess I'm keen to sort of look forward to see how this kind of waterfall development approach kind of moves towards that 300,000 ounces, because that dramatically changes your profile. And if gold prices do hold or anywhere near this, you're printing money for fun at that point. So look, appreciate your time. Let's stay in touch and see how you get on. Okay.
Thanks, Matt. All the best.